All right. Um, trying to make sure live. So, this is my first time doing this. So I just, want to make sure everything is straight. All right. I think everything is straight. So basically, what I'm going to be doing is showing you how did I catch this 1 to 9 risk to reward. Um, and yeah, I'm going to also catch another one live with you. So the first thing that I did was on my higher time frame, as always. All right, on my higher time frame, I spotted my trend, and I seen that price was bullish because why? Price went up, came down, went up, came down, went up. Price is bullish, right? So once I know the price is bullish, I mark my swing low. At the moment, I didn't have a swing high, but now I have a swing high. And this was a demand zone of sub liquidity. As soon as I finished that, I went to my 15-minute time frame. And guess what? On my 15-minute time frame, I did the same exact thing, right? I found my previous breaker structure. I seen that price continue to go up. So this is my previous breaker structure. I mean, guess what? In this area, this is my swing high. I mean, my swing low, and this is my swing high. So honestly, this should be an internal breaker structure, honestly. But really, I can just keep it as what I just said. All right, so boom. Right after I marked that, I did the same thing. I found my demand zone of sub liquidity, and in this scenario, it was here. This is my demand zone of sub liquidity, right? Um, and yeah, so after I basically did the same thing on here, I zoomed in. I said, okay, I anticipate price to start reversing, or basically, I anticipate price to start doing this, to tap into the demand zone and to create another bullish breaker structure. And I said, okay, like, where is that going to happen? When is that going to happen? And guess what? When price got here, when price gave me this and broke below this, I thought this was a market shift. But then I realized, for one, this is a V-shaped reaction. So for one, that is a liquidity sweep. And a liquidity sweep, guess what? It causes price to reverse. So if price gave me a liquidity sweep to the downside, price is going to go up. So I said, okay, price is going to go up. It is going towards some type of supply zone in this scenario. And that's what it did. It got to the supply zone, it came back down, and that's when I thought price was going to turn bearish. But guess what? Price did not break this low. It didn't break this low. So I said, okay, that means that this demand zone is doing the job. Because if this demand zone wasn't doing the job, I mean, when price came back, it would have broke past. I mean, price would have gave me a market shift. But the fact that this demand zone did do a job, price came back and went up, came back and it broke structure. Not actually breaking structure, but like it broke a structural high, right? So once I realized that price was not still bearish, I wanted to see what price is doing on my 5 minute time frame. So my 5 minute time frame, right? I seen that okay. I seen here this bullish candle was my liquidity candle, and in my trade plan, when price breaks below the liquidity candle, that's my fractal market shift. So I said, okay, I'm not going to enter here, but I want to see. Like I want to before I even explain that. For me, I use certain zones as like a test or like as a practice to see what price is gonna do when it get to that certain zone. So when price got to the zone, I say, okay, if I enter here, what's gonna happen? So if I would have entered that, I seen that price continue to go up. So in reality, I would have been stopped out. So I said, okay, really before price even started going up, I said, what will cause price to go up? So that's when I went on my 1 minute time frame. And on my 1 minute time frame, this is what I seen. Right, I seen that there is a supply zone of sub liquidity on my 1 minute time frame. And I know the 1 minute time frame can be very deceiving, right? 1 minute time frame, price may not respect it as much, But I realized that price is not bearish yet, right? Price is not bearish yet. So price is going to this 1 minute time frame, right? Price is going to this 1 minute time frame. So when price did get to this 1 minute time frame, I didn't just enter right here, as you can see. Why? Because price can do whatever it wants, right? And I want to flow with price, not against it. So when price got there, I waited for something. I waited for some type of reaction. Price got there with a lot of bullish momentum. So for one, of course, I'm not entering it. It got there with a lot of bullish momentum. It continued to go up. So I say, okay, it gave me this again V-shaped reaction, telling me that, symbolizing to me that price is symbolizing to me that that is a liquidity sweep, right? And so after this liquidity sweep, like I said before, um, I have to mark the candle that swept liquidity, which was this one. That means that this was my fractal market shift, right? But honestly, I seen that there was a gap here, so instead I marked this one. So when price got back there, I just entered, right? Because honestly, I didn't realize this before, but price came way up there and swept this candle as well. I didn't even realize this. That's why I was just stumbling just now. Price came way up there and swept that one. So honestly, my liquidity candle was this one. But before I marked my liquidity candle as this one. And so when price got back up there, that's when I entered right here. Right. So honestly, I didn't see it before. But yeah, price came way up there, it swept liquidity, right? Gave me a fractal market shift. And how do I target? Like where's my take profit? My take profit is here. And why is it here? Because there is lots of liquidity. I try to draw up. There's lots of liquidity sitting right there. Right. So I said, okay, let me target here and let's just see what price have. Let's just see what price does. Now, when price did enter when I entered the trade basically, I came in with a lot of bullish momentum. And I said, well, I might get stopped out. Like, and I was thinking about like just exiting the trade, even though it's back testing. I was thinking about, you know what, let me just cut it loose, let me just stop it. But then I said, you know what, I trust my trade plan. I said if I get stopped out, I get stopped out, and if I hit take profit, I hit take profit. And guess what? It hit take profit. And guess what? It kept going down. So my trade idea was 100% right. But then I realized something. Look what session I'm in. I'm in Asia session. Price is gonna go down. Like, I mean, I'm in Asia session, so I mean, like, okay, I see that there was consolidation right here. All right, price swept above this area, and now it's gonna go down. And now price may even come down way down here. Let's just see what happens. Actually, before we even do that, I do just wanna go over another this actually back test with just show you my back testing live as well. So that's what I'm about to do now. So honestly, I'm just gonna delete all my internals. Actually, I'm just gonna delete everything. Want to delete everything. I'm gonna let the tree run a little bit just to have like fresh type of start. And as you can see here, look, price did come down. Like it literally came down to what I was talking about. But I'm gonna let price run a little bit. I like to let price run just a little bit, before I look for another trade. Because I'll be like, okay, in reality, I'm probably not gonna be hitting candle after candle, trade after trade. So let me see. So in this situation, what do I see? Okay, price is bullish, right? But now price is here. My last bullish breaker structure was here, right? That means what? That means this will be my swing low, right? But as you can see, price broke past that swing low, which means what? Price, this was a market shift. I say price a lot. I didn't even realize that. So that means this was the swing high, or this is the new swing high. And until price shows me something else, this is the swing low. All right. And so this is my range. Price is bearish. This is my range. All right. Now, what do I do next? Well, since price is bearish, I'm going to mark my supply zone that not just a normal supply zone, but a supply zone that swept liquidity, right? So, excuse me. So if I zoom in, I see that this is a supply zone that swept liquidity. Um, that's the pivot candle. So honestly, let me see before I even mark anything. So this is the candle that swept liquidity. My fractal market shift will be here. And on my trade plan, in my trade, in my trade plan, I marked the pivot candle that either led to the imbalance or the pivot candle that led to the fractal market shift. And in this scenario, guess what? It's both. All right, this is the candle that led to the fractal market shift, and this is the candle that led to the imbalance. So in this scenario, it's both. So this is my supply zone of liquidity. This is my area. So this is where I anticipate for price to come to for me to look for entry. Now, price does not always get to your point of interest, right? And in situations like that, that's when you just have to pivot. So, right, let's see what price is currently. So right now, price has actually created another liquidity sweep down here, which means what? Price is going to start to go up a little bit. But if you look to the left, I see that price is also at some type of demand zone, right? I can say about something like around here, right? It's at some type of demand zone here. And is this a high probability demand zone? Yes. Why? Because this is a demand zone that swept liquidity. All right. So boom, this is a demand zone that swept liquidity. Price tapped into it a few times, and this time it went pretty deep. And so another thing is, right, and I'm spitting a lot of sauce here. I it depends on the market conditions, but I determine a mitigation when price gets deep into the zone. So this is not a mitigation. This is not a mitigation. It tapped into it, and you can use that tap to identify trade. But when price really gets deep into the zone, yeah, that's a mitigation. So boom, price got very deep past the 50% mark into the zone. So this was an official mitigation, right? And so now that I see that, guess what? I'll mark my swing high in this scenario of this area, and this is my swing low. So this would be my 15-minute area. And I know I didn't drop to my 15-minute time frame, but it's going to be the same thing, honestly. I just, just want the market a little different. So, all right, boom. This is my 15-minute swing high. This is my 15-minute swing range. My bad. I don't know why I'm a little bit further stuttering here. Like I said, this is my first time like doing this stream and stuff. I usually just upload regular YouTube videos, but I was like, I mean, let me stream. Let me show them that I'm not faking what I'm doing. Like I'm not faking catching 1 in the 20s and 1 in the 30s and stuff like that. Like for the people who do watch my videos, let me actually show them. Right. So let's see here. Like I said, this is my swing range, right? This is a liquidity sweep. But guess what? As you see on my 15-minute, it's not a liquidity sweep. My 15-minute, what is it? A bearish break structure. A bearish internal break structure, right? And so, but if I zoom in, my liquidity sweep would be down here, right? Why? Because again, this is a V-shaped reaction. And I'm not saying all liquidity sweeps have to be a V-shaped reaction, but I'm saying a liquidity sweep in general will be a sharp reaction. That's why I say V-shape, because a V-shape is pretty sharp, right? So if I zoom in, right, would I be looking for buys? Would I be looking for sales? I'll be looking for neither at the moment until price shows me something. Because as you can see, price is heavily bearish. Why would I look for buys, right? And right now, price is at a demand zone of sub liquidity. Why would I look for sales, right? But I'm not saying don't, but I'm saying just look into what price is doing. So I zoom into what price is doing, right? And since price is at a demand zone of sub liquidity, guess what? I'm going to use that, right? It depends on what price does, but I'm going to use that zone to trade price up to a supply zone, and then I can use that to trade price back down. And that's what I normally do. That's sometimes what I do. So right now, price is at demand zone of sub liquidity. But if I zoom into the candles, right, I see that price came down even deeper, sweeping liquidity here, right, giving me the fractal market shift. It never tapped back into my area here. This is the area that I anticipate price to tap back into, and it never did. All right, I didn't tap back into it. So this can be an area that I want to see what price does when it gets there. So I just want to see, okay, it goes up, like it's sweeping more liquidity, so it's coming back down. Okay, cool. And that's why you don't just enter, right? Because let's just say, oh, this is a demand zone of sub liquidity. I'm gonna just enter here. Guess what? You would have been stopped out. Simple as that. You would have been stopped out. That's why you see what price is doing. Now, I guess what I see now that price is still bearish. Price is now reversing, and this demand zone may not be doing its job. It still has a possibility because why? It hasn't broken out of the zone yet. Now, when it breaks out of the zone, it could be doing two things. It could be either giving a liquidity sweep or prices continuing going bearish, or it could just be giving a market shift. All right, so let's see. All right, maybe that's the sign right there, a liquidity sweep. Price came down, give me what? Another V-shaped reaction. This is the liquidity candle. Price sub liquidity. This is the fractal market shift pivot candle. I'm not going to answer, but I want to see what price does when it gets there. Oh, when price gets there, I'm going to my 5 minute time frame. I'm taking this very slow. Okay, price like it might not be coming back down. All right, so like I said, sometimes price doesn't always come to your zone. But to identify if price is still bullish or bearish, guess what? This is a supply zone, right? Right. This is not just a normal supply zone. And even though it's kind of weird, but this is also a supply zone of sub liquidity. To identify if price is going to remain bullish or bearish, look and see what price reacts to the zone. If this supply zone to do the job, as price is going up, the demand candles are going, the bullish candles are going to get smaller, the bearish candles are going to get bigger, and price is going to do this. If the demand was to do a job, I mean, bearish candles wouldn't even exist. Price would just continue to go up, right? And so in this scenario, what do you think? All right, it looks like the bullish candles are going to take over, honestly. Like I said, like, so, all right, oops. So, like I said, this is a bullish breaker structure. I mean, a liquidity sweep, a demand zone, sub liquidity, and this is my area. So honestly, I'm not even going to do anything. I'm just going to wait for price to come back down here. Like, I'm not even going to look for an entry, like up there, because right now price is literally in the middle of nowhere, and that is the worst time to trade. Just because price gave you a bullish breaker structure does not mean like price is in the middle of nowhere right now. I'm gonna speed it up a little bit. I don't want to make this too long. So let me see. Now, if price doesn't come back down, then it's just totally fine. Okay, come down a little bit. Not really coming down where I wanted it to come down to. All right. So right now, price is in the premium of this area, so I anticipate price. All right, boom. I can look for a selling opportunity, and I said it because remember that tool that I pulled out, the premium and discount. Right, this is my swing low. This would be my swing high. Right. Right now, prices were in a premium, and if you don't know what this is, it's basically telling me that like price is gonna be more bearish and bullish, right, in this area. So, um, this is my internal breaker structure here. I feel like I can just catch an entry right here, honestly, like very, very quickly. Um, all right. And it takes some like experience to do this. Like honestly, I've only been trading for 3 years, bro. Like first year, I was BSing. Second year, I wanted to do it, but I still wasn't sure. This is my third year actually taking it serious, so I'm really behind schedule. Honestly, I could have been profitable, but hey, We all make bad decisions. So even though price is like in the middle of nowhere in a way, but at the same time, it's not like in the middle of nowhere. If you get what I'm saying, like I said, let me show you again. Right. So this is my new swing low, and this is my swing high. Guess what? Price is not in the middle of nowhere. Now, when price was here, yes, price is in the middle of nowhere. When price is not at my desired area, yes, price is in the middle of nowhere. But if price is getting somewhere, if price is showing me something, price is not in the middle of nowhere, right? And so I'm gonna go back to my 15 minute, and I know I'll be jumping all of these time frames. I might be even be using 5 time frames: 4 hour, 1 hour, 15 minute, 5 minute, 1 minute. But it's a reason I do it. 1 hour is to really identify the cracks between the 4 hour and 15 minute. 5 minute is my entry candle, I mean entry time frame. My 1 minute is for sniper entries. So again, this is a supply zone of sub liquidity, prices in the premium area. Right. And honestly, I do expect to get stopped out. Why do I have that mindset? Because price is, I expect to get stopped out because the internal trend is still bullish. Like I'm trading against the internal trend. But the second layer of internal trend, actually no, I might not get stopped out. Because the second layer of internal structure is bearish. No, I'm saying, let me see. My batteries have brain fart. Swing structure is bearish. Internal structure is bullish. Okay, I'm right. No mind. I'm right. I'm right. I'm tripping. I'm tripping. All right. So yeah, external structure is bullish. Internal structure is now is bearish, and this is the area that I'm targeting. So price tap into it. Really, I want price to get to here, honestly. And if it doesn't, like I just look for another entry. Okay, boom, gives me another breaker structure. Guess what? If it gives me another break structure, I do the same exact thing. I mark this as my bearish break structure. This is my swing high. That means this is my swing low. Price has the potential of getting up there, but gonna see what price continues to do. Now, if price does come back up, I can mark here. That's kind of in the middle of nowhere, honestly. Still, honestly, I might just wait for price to get back up there. Cool beans. One more. Oops, I didn't do that, but I did it on accident. Boom, price tapped into my 15-minute point of interest. So right now, this is where I'm interested in because now prices are my point of interest, right? And if I look to the left, this is my 5 minute time frame, right? If I look to the left, what do I see? This is a supply zone. There's some liquidity here. This is a supply zone, also some liquidity here. Now, where do I expect price to go? I don't know because price up liquidity there. But what I'm looking for is for price to give me what a fractal market shift here. Why that specific candle? Because this candle sub liquidity above this inducement, right? And if I were to pull out this tool, boom, right, it's sub liquidity above this inducement. And so if price continues to go up, then I just continue to adapt. But it broke it, but that's not what I'm looking for. Price is gonna go back up, most likely. There we go. So boom, it went back up. Still it's gonna go up even higher. Okay, there we go. That's something right there. And what I was looking for basically was my entry criteria, right? I was basically looking for what I need price to do in order for me to enter, right? And I seen here price is gonna go back up. Why? How did I even know that price was gonna go back up? Because when price gave me this fractal market shift, the candle that closed below it, it wasn't with any imbalance. It was just a normal low candle. All right. Price continue to go up with a lot of bullish momentum. Going up even higher, sweeping liquidity here. And that's what I was looking for. A liquidity sweep inside of the zone. It gave me a fractal market shift. And this is my entry. So guess what? Now, actually, I would have entered right here. This is my entry. I take profit. I mean, my stop loss. I'll go to my 1 minute for that, actually. All right. Stop loss would be, let's see, 1 minute time frame. And when I get to my 1 minute time frame, I ask myself, is there a reason that price will stop me out? And in this scenario, no. Why? Because all of the liquidity has been swept. So guess what? If I want to be a little bit conservative, place my stop loss just above the area, I'm gonna take profit, right? I always place it at a opposing zone, the sub liquidity. And in this scenario, it might be here. I'm thinking about really placing it here because this is a 1-7. Like, come on, bro. But I really feel like price might come down here and take out this 1-11, right? And I don't want to be, I don't want to be too greedy, and especially since I'm streaming, and I might get stopped off. But like, let me see something. I just want to make sure like price is gonna come down. I don't want to just guess, you know. I really feel like price might come up here. Let me see something. But at the same time, this demand zone did not do its job. But it could be coming to this demand zone here. It could be coming to this demand zone and using that demand zone to continue to go back up. So I'm just going to enter, and if I get stopped out, I'm going to take another entry and expand it. All right, I'm going to get stopped out. I've seen that already. I might get stopped out. Come on, don't do your job. All right, I'm going to take profit. Probably, I don't know. I'm just going to let it play out, bro, and just see what happens. I'm going to see what, yeah, I'm getting stopped out. All right, so boom, I got stopped out. All right, I got stopped out because of liquidity. So all I'm gonna do is wait for price to sweep this liquidity here, cause that's all it's doing. It is coming up there to sweep more liquidity. All right, it's basically it swept it. No, it didn't yet. Still didn't sweep. Okay, it swept it, and the price will close below there, and then I'll enter. All right, so let me see, because this one took a little bit longer. So boom. Actually, I'll be in a trade already. I really think I might get stopped off if I enter here as well. And I said it because price is still heavily bullish. Price is still heavily bullish. I'm going to my 1 minute time frame to see something. I might be missing something. I might be overlooking something. Okay, went up, came down, went up, some more liquidity. This didn't break here yet. I feel like I'm overlooking something here. I'm trying to see. Okay, this is a better entry. And the reason I went to my 15 minute is because higher time frames hold stronger power. So 1 minute time frame is going to be decisive. 5 minute time frame, it can be decisive. But 15 minute, 1 hour, 4 hour, they're always going to tell the truth because they're higher time frames. And higher time frames hold more structure. I mean more power. Oh, let me see something before I do that. I really think this thing. I just didn't wait for the liquidity to be swept. They might even have liquidity on my 1 minute time frame. If price gets here, then I will look for another entry. But for the moment, I'll leave my stop loss just to be a little bit conservative because I have some doubts in my mind that price may not respect this area. All right, price may not respect it. And if I do get stopped out, then I'm just gonna document it, call it a day or whatever. But let's see what price does, bro. In the back of my mind, I still think I might get stopped out. But let's see. Let's see. Yep. All right. So The reason I got stopped though is because for one, I just feel like I'm not identifying with price. Like maybe I'm just trying to rush through this because like I said, this is my first time streaming and stuff like that. So I feel like maybe I'm just trying to rush through this. But I mean, I got stopped out twice. But guess what? Let's see what price does after this. Oh my jeez, it was liquidity, bro. It was definitely liquidity. So like you see that, like I probably could have waited a little bit longer. Price would have sub liquidity. Oh, I didn't even see this yet. Okay. Well, that's another reason I got stopped out because inducement and another inducement just sitting there like grass in a candy field. Like, bro, liquidity was sitting there and I didn't even recognize it. And that's why maybe I should just waited on my 15 minute. But yeah, okay. Boom. Price didn't come up there though. Even if I seen the price didn't come up here. Let me see something. It still didn't come up there. Oops. I just want to see something. If price is going to come up there and respect the area, all right, probably not. Because, yeah, now it's in a discount. But, yeah, I would just say I got stopped out because of liquidity, right? And now let me just go and document both of these losses that I just encountered, right? So let's go here, actually. Let's go here. Hold on. Let's go here. Oh shit. I was about to throw that. Alright, let's go here. $54.10. I'm really might just end this video honestly because I got things going on in the background. But this is what I do every time. 49.75. Yeah. I'll do 2 contracts. Alright. Setup could have been clearer, so no. Both these trees, Asia and London. I ain't gonna lie, that's something that I'll add this in later. That's something that I just need to start paying attention to. Is oops, is the to call it the sessions. Like I feel like there's really something that I need to pay attention to, like the sessions. 54, 55. I'm gonna enter at the same place twice. Oh no, I didn't. 54, 55. I mean 455. But yeah, I lost both of these trades. It's fine. We all win some, we lose some. Actually, even though this is back testing. What was E75? Two contracts lost this as well. So this was London. I'll add in the screenshots later. But I lost both of these. And before I even recorded this video, I lost this morning and I won this. I won this literally before I recorded this video. So I'm also going to post that too because I recorded this as well. So maybe just me being camera shy. I don't even know, bro. Honestly, but I know the stream is getting kind of long. I'm actually about to go and DoorDash because if you know my story, I really don't have a job at the moment. Actually, my job It starts June 25th and it's June 12th. And yeah, I need some money, so I'm not going to do that. So I'll just say this: the reason that I lost both of these trades is because of liquidity. I feel like my entry was on point because literally after I got stopped out like a retail trader, price ran to my TP. It ran to both of them. So it was like, it was liquidity, bro. And I just have to continue to look. I have to continue to observe liquidity, continue to understand liquidity. But for the most part, yeah. And if you think I'm just like faking what I'm doing or faking me catching one to whatever, um, say something, so I can really like show you like this is not for fake. I'm doing this for real. Like I had a Notion document, but I deleted all of them and transferred everything to this app. I think I even have this. Let me see. Let me see. Nah, I don't think you can see that, bro. I just realized that you can't even see my screen. Let me see, bro. I realized that you can't even see my screen all the time. So look, this is what I just documented. These two. Oh, you can see my screen because I'm looking at it on my phone just to and it said that it wasn't sharing my screen, but I guess it is. But all right, anyways, thank you for watching this video, bro. I got stopped out twice, so like, I mean, we all get stopped out, bro. Tomorrow I'm gonna come back and I'm gonna document. I'm gonna stream again, and just really that's what I might just start doing. Just start streaming back testing videos because at first I would just post normal regular YouTube videos, but I'm gonna start streaming. I'm gonna start streaming, bro, and I'm really start to get right. Because today, honestly, today, bro, let me show you what I mean by that. Today, guess what? Oh, not that one. Today, I just want to show you something, bro. My mental clarity was not all the way there, and this was today. Like my mental clarity, like, bro, I did, I'm just gonna say this. My mentality wasn't there. Like you see me stuttering, I'm doing all this. Like my mental clarity isn't there, bro. Maybe I should never stream today, but it's alright. I was even hesitant on even backtesting. Honestly, like I won 1 out of 3. Like this is a bad day. There has been good days because I just seen a good day out of date of last month, bro. What this is 53K, bro. 53. Come on, like all wins, bro. Like there are good days. Don't get me wrong. And what's another one? Like 25, bro. Don't get me wrong. I do have good days, bro. You know, I won 13K in one trade, bro. 1 to 7. Like, don't get me wrong, bro. I have good days, but just today, it just wasn't it. So, I thank you for watching this video. I appreciate you. And I'll see you in the next one. Peace out.